Hi there, Shingrai here again with just an update on some of the key themes, ideas, and events that have been shaping global economic climate as well as portfolio performance. US data coming in for the preceding week came in with a number of claims of 3.2 million, which is about 600,000 down from the preceding number. This would mean that over the past 7 weeks, US jobless claims have passed a total of 33 million and really just serves to emphasize the current structural weakness in the global economy. Tensions, of course, have been flaring between US and China, with President Trump threatening to increase tariffs or even breach the trade deal sort of tentative agreement that US and China has established earlier in the past couple of months. However, talks are rife, which suggests that US and China negotiators are set to sit down next week and iron out the details of the trade deal going forward. In terms of crude oil, earlier in the week, crude oil had stumbled a bit from what a lot of people were seeing as the best run it had in potentially 9 months. But of course, Saudi Arabia has increased oil prices, and this has led to an approximately 4% increase in the price of Brent crude as of trading today. Economies are beginning to reopen in Europe, and of course Germany has been the highlight of this event, having handled the outbreak particularly well, and provinces within Germany looking cleanly forward to reopening, and of course football being allowed to return to center stage. Markets around the world have buoyed with a bit of optimism looking towards the future, and markets seem to indicate that the future is a bit more positive than current evidence would seem to suggest. And of course, we've seen the Nasdaq Composite completely wipe out the losses that it had on a year-to-date basis. In terms of CBAM portfolio performance, we've recently distributed our April performance monitor, which highlighted the fact that April, of course, was a particularly good month compared to the preceding 3 months for equity indices, and that would see CBAM 3 to 5, which are a bit more equity heavy, outperforming the fixed income and treasury heavy CBAM's portfolios 1 and 2. Over the month of April, CBAM 1 would see a return of 4.22% versus a return of 10.53% in CBAM 5, while CBAM 3, our medium risk portfolio, sat squarely in the middle, returning 8.08% for the month of April. In terms of major indices, we saw particularly good performance coming out of Merian UK smaller companies as a fund, and that was the best performing fund for the month of April, alongside MSCI India and iShares S&P 500, whilst the worst performing funds were Wisdom Tree Brent Crude 1 month and Kames Property Income Feeder. Our most recent ideas that we've been looking into and thinking about have been around potentially moving to increase our energy exposure in the lower risk portfolios 1 and 2, which previously did not have any exposure to energy companies, and we took some small positions there for CBAM 1 and 2, and of course we did hold energy positions in CBAM portfolios 3, 4 and 5. In CBAM Portfolio 2, we recently just shaved off a bit of our allocation to emerging market fixed income, and we really just deploy that to the cash allocation in CBAM 2, which we like to keep there as a buffer in terms of tactical asset allocation, where we can quickly move in and deploy cash once we find attractive valuation points for either equity or fixed income markets.